Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of big business finance. And let me tell you, Orbit Innovations Group Inc. has quite the story to tell in their latest filing. They're a company that is still finding its feet, and their numbers definitely reflect that early stage. Before we dive in, if you like getting clear, nonsense breakdowns of these financial documents, make sure you hit that subscribe button. And hey, if you want to chat more about these companies and get direct insights, we've got a fantastic Discord community linked in the description below. You should definitely join. Alright, so what we have here is Orbit Innovations Group Inc. filing their annual report. Think of this as their yearly checkup telling everyone how they've been doing. It is for the fiscal year ending the 30th of September 2025. They are incorporated in Wyoming and their address is actually in Prague, Czech Republic, which is kind of interesting for a US company. They're saying they are not a well-known seasoned issuer, not required to file certain reports, and they are definitely not an accelerated filer. They are a non-accelerated filer, an emerging growth company, and a smaller reporting company. This little snippet tells us how many shares of the company exist or are in circulation. As of early 2026, there were about 3.2 million shares. They also mentioned that there is no active trading market for their stock. This is a big deal because it means it is hard for people to buy or sell these shares easily, which is usually not a good sign for investors looking for liquidity. So, what does Orbit Innovations Group Inc. actually do? They were incorporated in Wyoming on the 7th of December 2023, so they are a very young company. They describe themselves as a development stage company working on interior, exterior, landscape, and brand design projects. Basically, they are in the business of making spaces look good and creating brand identities. Now, under risk factors, they simply state, not applicable to smaller reporting companies. This is something they do because they are a smaller company. It means they don't have to detail all the potential problems they might face, unlike bigger corporations that have to lay out every single risk. They also touch on cybersecurity, thankfully. They say it is part of their overall risk management. They're using multiple third-party vendors with security measures like two-factor authentication. The good news, they haven't experienced any material cybersecurity incidents in fiscal year 2025. That is a win, even for a small company. This is the auditor's report. It is basically the stamp of approval, or lack thereof, from the accounting firm. And here, it says the financial statements present fairly, in all material respects, the financial position of the company. That's a good start. But then, bam, they hit us with the going concern red flag. This is super important. The auditors are saying that the company has an accumulated deficit. That means they've spent more money than they've made. They've only generated limited revenue since they started. They are dependent on getting more money from related parties, selling stock, or other financing to keep going. This means there is serious doubt about whether the company can continue operating in the future. It is like the auditor is saying, these financial statements are prepared as if the company will stay in business. But honestly, we're not sure if that is going to happen without more money coming in. So, the auditors believe the financial statements are okay, but they are clearly worried about the company's ability to keep its doors open. This isn't a company that is turning a huge profit or even breaking even yet. Let's look at the numbers themselves. On their balance sheet, as of the 30th of September 2025, their total assets were $34,677. That is not a lot. On the flip side, their total liabilities, what they owe to others, were $11,707. Stockholders' equity, which is basically what the owners have left after debts are paid, was $22,970. Compare that to the 30th of September 2024, where total assets were only $2,000 and total liabilities were zero. They've grown, but from a very small base. They had $32,127 in cash at the end of September 2025. That is a decent amount for them, up from just $2,000 the year before. This cash likely comes from the financing activities. Now, let's look at how they performed over the year. For the year ended the 30th of September 2025, they reported revenue of $24,000. That is up from $0 in the prior period from their inception. They also had $6,000 in cost of goods sold, which means they spent money to earn that revenue. This left them with a gross profit of $18,000. Then you see expenses like $2,067 in bank charges and a whopping $15,532 in legal and professional fees. They also had $450 for website amortization. After all these expenses, they reported a net income of $295 for the year. This sounds good, right? A profit, but remember, it is after all those costs, and from a very small revenue base. For the period from when they started in December 2023 to September 2024, they had a net loss of $544. So they've moved from a small loss to a tiny profit. That is progress, but it is incredibly small. Looking at cash flows for the year ended the 30th of September 2025, they had $6,745 in cash from operating activities. This is interesting because their net income was only $295. The difference comes from an increase in accounts payable, meaning they may be paid some bills later, and website amortization. But the big driver of cash is clearly financing activities. For the year ended the 30th of September 2025, they had cash provided by financing activities of $26,382. This came from a related party loan of $5,707 and $20,675 from issuing common stock. This is how they are keeping the lights on. If we look at earnings per S-Hair for the year ended the 30th of September 2025, it is essentially $0. For the prior period, the loss per S-Hair was $0.01. This basic math shows how small their profits and losses are relative to the number of shares. The notes to the financial statements give us more color. They admit they are still in the early stages of development. Operations are not yet self-sustaining. They need additional financing. This ties back to the auditor's going concern warning. They explicitly state they have incurred accumulated losses of $249. Cash inflows are limited and they rely on related party advances and external financing. To continue as a going concern, they need more financing. They can't guarantee they'll get it. This is the core challenge for Orbit Innovations Group Inc. Under intangible assets, they mention capitalizing costs for their website. They spent $3,000 on it and are amortizing it over 5 years. This means they're spreading the cost out over its useful life. This is where we see that related party mentioned earlier. The company has relied on advances from its sole officer and director, Svetlana Belikova, to fund operations since they started. These advances are not interest-bearing and are due on demand. As of the 30th of September 2025, she had advanced $5,707. And it was still outstanding. This is a common way for very early stage companies to get funding, but it puts a lot of eggs in one basket. They mentioned they are authorized to issue 75 million shares of common stock. As of the 30th of September 2025, they had over 3 million shares issued and outstanding. In the year that ended September 2025, they issued over 500,000 shares for $20,675. Again, financing the business through issuing new stock. Here is a look at what happened after the 30th of September 2025, but before the report was finalized, between October 2025 and January 26, they issued another 136,500 shares for $5,460. This shows their continued reliance on selling stock to fund operations. This section is about internal controls, essentially how they make sure their financial reporting is accurate and reliable. They've concluded that their disclosure controls and procedures were not effective. They identify material weaknesses like a lack of sufficient overall internal controls, inadequate oversight, and issues with timely preparation and review of accounting records. This is another significant red flag. It means there is a higher risk of errors or fraud going undetected. This tells us who is running the show. There is only one person listed, Svetlana Belikova, who is President, Treasurer, Secretary, and Director. She's also their Principal Executive Financial and Accounting Officer. She owns a significant chunk of the company, about 79.57%. For the past decade, she has worked as a freelance designer. It is a very lean operation, with all key roles filled by one person. And here is the interesting part about compensation. For both the year ending September 2025 and the prior period, Svetlana Belikova received $0 in salary bonus, stock awards, option awards, and other compensation. They have no current employment agreements, no pension plans, nothing. This is pretty common for early stage companies where the founders are reinvesting everything back into the business. This reinforces what we saw. Svetlana Belikova directly owns 2,544,000 shares of common stock, making up about 79.57% of the ownership. This means she has a huge stake and therefore a lot of control. This reiterates that she issued herself shares for a nominal amount and loaned money to the company. It is all interconnected. They paid their auditors $11,000 for services in the year ending September 2025. This is the fee for auditing their financial statements. So, what is the story here? Orbit Innovations Group Inc. is a very young company trying to establish itself in the design world. The good news is they are generating some revenue and have managed to show a tiny profit in their latest fiscal year, which is an improvement from a loss. They've also managed their cybersecurity risks reasonably well. However, the major concern, the thing that jumps out immediately, is the going concern warning from their auditors. They are heavily reliant on financing, especially from their sole officer and director, Svetlana Belikova, who wears many hats and has advanced personal funds and received stock. There is also the issue of ineffective internal controls, which means there is a higher risk of errors in their financial reporting. Right now, Orbit Innovations Group Inc. is very much in the startup phase. They're not profitable in any substantial way, and their ability to continue operating is questionable without further investment. While they have a clear business model in design services, they need to demonstrate sustainable revenue growth and improve their financial controls to gain investor confidence and reduce their reliance on related party funding. It is a long road ahead for them, and investors looking for stability and clear profitability might want to wait and see how they navigate these early challenges. Alright, that is our breakdown of Orbit Innovations Group Inc. Latest filing, what is your take on these numbers and what they signal for the company's future? Do you think they can overcome these challenges? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the corporate world. Don't forget to check out the Discord link in the description for more discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.